Good morning and welcome to Traders 20 on ET Now. I'm Megha Chadha.
Good morning everyone, I'm Avan Dabash and let's get you an insight as to what the show is all about. Well, Traders 20 is essentially where we get you a dose of 20 fresh stock ideas so that you can have a profitable trading day. We'll get on board our 6 technical experts over the next 30 minutes to identify some of the most exciting bets in the markets.
And it's not only equities, we also talk commodities, and in fact we'll be showcasing commodity picks as well as strategies that would help you make the best of the futures and options market. So let's get started then with a look at the lineup for today. We've got Ashwini Gujral joining in from New Delhi as always, Nitesh Thakur, Sandeep Wagle, Prakash are here with us in Mumbai, Rajat Bose all the way from Kolkata and Deepak Mohani from Pune.
Straight to the equity markets and turning out to be a fairly uninspiring day of trade. We're still clinging on to 6,000 to 6,011 on last tick for the Sensex up by a mere 40 points as we speak. It's pretty much even Steven when it comes to the market breadth veering marginally in favor of the losing side. You've got IT and technology which is holding up on the downside. Capitals and metals coming under a fair bit of pressure. Some of the top gainers, HCL Technology is clearly giving a big thumbs up to its quarterly numbers which surprised the street. So IT is taken all the way up with Pro following suit. Apart from that, you've got a Tata Motors and DLF which is holding up very strongly. Okay, that is the management of HCL Technologies, which is going to start briefing the media on the back of its Q3 numbers. And let's just pull up the stock price because as pointed out for the second quarter, you did have the counter which hit a 52-week high on the back of the company putting out numbers which certainly beat analyst estimates on the net profit as well as on the revenue levels. Remember, they reported a quarterly revenue this time around of 6,274 crore rupees. That's up by close to 20% on a year-on-year basis, and on a sequential basis, higher by close to 3%. You had the net profit which came in at 965 crore rupees, up 68.5% on a year-on-year basis. That's Vineet Nair talking about the numbers.
So a difficult year. All engines in HCL were firing well. Our revenues grew 13%, net profits by 41%, and our operating margin expanded by 360 bps. So all in all, a good year. Even if you look at last quarter, our revenues grew by 3.6%, which is the highest in the last 5 quarters. In terms of EBIT margins, improved from 15.8% in OND 11 to 19.8% in the previous quarter. From a deal booking perspective, we had a significant deal booking, a booking of about $1 billion, fueled through 6 large transformational engagements in them. If you look at the, from a sectorial point, largely most sectors fueled the growth for us. Obviously driven a lot more by financial services at 11.3%, followed by public services at 5%, healthcare 4% on back of a 14% growth in the previous quarter. From a geography perspective, Europe grew by 6%, and in Americas by about 3.4%. Both, again, a balanced growth. I would say it's really not a significant quarterly change, but it's obviously some engagements moving in and getting into steady state in one region compared to the others. From a horizontal standpoint, our service lines infrastructure grew by 10.9% on back of a 10.4% growth in the previous quarter. BPO services has been a great turnaround story, and I'll wait for Rahul to talk about that. The EBITDA margins are in double digits over there. And other service lines as well, like EES and ERS, pretty much in line with the industry growth rates on a year-on-year basis. With that, I'll hand it over to Anil.
Thank you, Anant. This has been a phenomenal performance in the quarter as well as the year. Just as Anant mentioned, 3.6% revenue growth quarter on quarter, 10% net income growth. If you look at the year, again, the numbers speak much better. So just moving on to a couple of other things. So there has been an acceleration in the revenue growth throughout the year. So if you go back in OND 11, we grew by 2%. Same time last year, it was 2% growth. Then it came 2.5, 3, 3.2, and 3.6. So phenomenal increase. When you look at the net income margin, this is the 5th quarter of net income margin expansion. In the last quarter itself, we expanded by 90 basis points. Our net income margin today is 15.4%. Our return on equity is the leading in the industry. It's like 35% this quarter annualized. If you look at the cash conversion, the operating cash generated to net income ratio is 1.4 times. If you look at the free cash flows to EBITDA, is close to 88%. So there's a phenomenal sort of a change in the parameters over a period of time which has taken place. On top of it, we did well in terms of our hedges as well. So we had a hedge book of 1.6 billion, and our average rate for the next 12 months is in excess of 54 rupees. If you look at our utilization, we improved our utilization. Our margins expanded with the help of utilization, higher realizations offshore. So the overall, the business has done extremely well. I now hand over to Steve.
Thanks, Anil. So just let me talk about public services first. So we saw good growth this quarter of 5.1%, 23.3% for year-on-year. And I think the story on public services is quite similar to what we've seen in Europe and why we've seen some growth in Europe. We're seeing a benefit of some of the financial pressures that those sectors are under. Traditionally, public services, Europe, particularly continental Europe, has been quite conservative in looking at some of the propositions and some of the efficiency offerings that we have. And so as we've seen Europe go back into recession, as we've seen public services need to drive greater efficiency, that market has opened up to us, and this quarter has been a continuation of the strong growth that we've seen in that regard. In terms of public services, we've particularly seen good growth in the utilities market, and we continue to expand and solidify our market-leading position in that. Enterprise application services, we've seen again a relatively flat position there as discretionary spend, which is the primary driver of our enterprise business, remains quite slow. We see pipeline continuing to build in the emerging technologies that I've talked about for the last couple of quarters. So I would say particularly mobility is starting to now translate into real pipeline opportunities. Companies not just looking to do isolated mobility activities, but actually look at putting mobility platforms in place. So we're starting to see that, and our strong relationship with SAP, who've now become the market leader in mobility with their acquisitions of Sybase and Cyclo, we think gives us good opportunity. We're also starting to see in memory become more tangible again in terms of pipeline opportunities. So from the end of this quarter, SAP will only be selling its Business Suite on its HANA in-memory platform, and we see opportunity coming out of there. A couple of quarters ago, we talked about the fact that now that the Axon acquisition is fully integrated, we're looking to drive improved profitability and migrate more services into our delivery centers in India, which is a profit enhancement strategy. And so you've seen this quarter as the top line's been flat, but you've seen the flow through of the benefit of moving that. So it impinges the top line as we move more work offshore, but it improves our profitability. And you've seen the margin expansion that we've enjoyed in that. So quick update on those businesses. Raul.
Thanks, Steve. Very quickly, first of all, I'll talk to you about the financial services business. So we had a good top-line growth in financial services this quarter. We did clock, 11.3% growth rate in financial services this quarter. And if I look at a year-on-year basis, we had a 15.1% growth in financial services. This growth is on back of some of the large wins that we'd had, which we had announced in the calendar year, earlier on in the calendar year. And these large deals have gone into production, and therefore we've seen some top-line improvement. I'd like to also mention here that the deals included new customers added. So we added a couple of new customers which have also gone on ramp mode at this point of time, giving us the revenue increase in this particular quarter. Financial services as a whole continues to be quite stressed from a market perspective. Our clients are in a situation where they are facing a tremendous amount of pressure in their own markets. So they're looking at ways to improve the costs that they're running today in their IT infrastructure and in the operations. And therefore, we are positioning our services to be able to help our clients at this point of time by improving the productivity of the assets that they've got, improving the productivity of the spends that they have. We've got very good RTP products, as you know, run the business products, infrastructure, BPO, application services and maintenance. So we are approaching our customers at this point of time, trying to improve the productivity of their spend. And at the same time, we are also working with them to move some of the money that they are saving into transformational deals. And to some extent, we are trying to bundle our run the business deals with transformation deals so that the customer gets a more end-to-end flavor of what we can deliver. And therefore, for us in financial services, it's all about trying to acquire new customers and also trying to increase the number of services that we are giving to our existing customers by trying to sell more services from our stack of services which are already there. If I look at BPO, which is the other business which I look after, the BPO business grew by 1.7%, and if I look at last quarter, it had grown by about 6.6%. So the key thing to note is that our top line has started moving up, and this is on the back of a completely transformed business model. So if you look at our EBIT performance, we had an EBITDA in double digits this quarter. This is the first time, I would think, in the last 12 to 15 quarters that our EBITDA margin has been positive in double digits. So we had about a 12% EBITDA margin at this point of time. So what we've done in BPO is a completely transformed business model. We are focusing on a few customer segments, and we are focusing on delivering services in what we call as the next generation of BPO. So we are delivering services which meet their needs, which we think will happen for the next couple of years and maybe more than that as well. So completely transformed business model, new focus areas in terms of verticals, new service lines to the customer, and I think that's now reflecting in obviously margins being in double digits and growth coming back into the BPO business. I'd like to hand over to Prithvi for commentary on HR.
Thanks, Rahul. Good morning, everybody. The results in my view reflect that the employee first, customer second strategy continues to produce the kind of results that we are looking for. And we see that the culture that we have created is resulting in some of the outcomes that my colleagues have spoken about. We continue to reinforce that in the organization, and continue to build that across all our teams and across all our organizations. Our hiring continues to be in line with some of the demand that we see and the forecast, so we continue to focus on that. Our attrition has been constant. Our voluntary attrition is tracking at about 13.6%, so that's been consistent over the period of time. And the work that we are doing with our teams is resulting in better productivity and performance. I think Anil referenced our improvement in utilization. So our workforce operations and our tight alignment of practices across all our functions continues to produce what we expect. So yes, it's been a good quarter, a good year, and I'm happy to be here and share that with you all.
Great, thanks, Prithvi. Apna, can we open the bridge for questions, please, first, before we get onto the podium over here?
Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press...
All right, that's the management, of course, of HCL Tech addressing the media, reiterating that spectacular set of numbers. The stock, of course, is also cheering the news. We've got the IT pocket. Remember, that's the biggest move on the index right now. And they did highlight how it's the 5th consecutive quarter of margin expansion coming in for the company.
Very strong traction on the stock price as well. It did hit its 52-week high and tempered off from those levels of 720, but nevertheless holding up very firmly in the green. But moving away from that, let's get right back to Traders 20. Ashwini Gujral joins in from New Delhi and Mitesh Thakkar from Mumbai. Here's a quick disclaimer. Please do consult your financial advisor if at all you choose to take on board any recommendations. Taking it across to Mitesh to identify his top trading recommendations for today. Mitesh.
I've got 2 buys and 2 sell calls. The sell is on Century Textile with a 405 where some kind of breakdown happens. Sell with a stop at 411 then and look for a target of 385. OBC is a sell where we have seen some fresh intraday sell signals. Sell with a stop at 343 for a price target of 320. A buy on TCS as well as Tech Mahindra, both from the IT space. TCS can be bought with a stop at 1343. I think it's already moved up in the last few minutes, and a target of 1390 is what I'm looking for. And Tech Mahindra, which is recommended at about 1010. With a stop at 989, can go up to as high as 1050 in the coming days.
Okay, so 2 IT names featuring on Mitesh's list, in addition to that Century Textiles as well as OBC. Let's take you through what Ashwini is recommending right now. It's 2 longs and 2 shorts for him as well. Starting off with the United Spirits, he's recommending shorting that one for a target of about 1690 rupees, but do keep in mind a stop loss at 1800. His next recommendation comes in on the cement space, and ACC is the next shorting idea. You could be keeping a stop here at about 1380, and remember to put in a target of 1290. On the long side, Jubilant FoodWorks is looking strong right now, so you could look at buying into this one for a target of about 1,330 rupees. But remember to put in a stop at 1,245. And the last recommendation comes in from the IT space. It's a Wipro that Ashwini likes, so he recommends going long for a target of 451 rupees and a stop at 429. Let's go across to Sandeep as well as Prakash then to get their trading recommendations right now. Sandeep, start with you, and what are the 3 ideas that you've identified?
Well, the market is, I believe, is very lackluster, and we are in a range, so you can have stocks moving both ways. I have a buy in Tech Mahindra. The IT pack is looking very strong, so I think that would be taking one of the stocks in that space would be a good idea. A buy in Tech Mahindra, stop loss of 1005, target of 1055. A very clear price and volumes breakout in the daily chart. This move should come in over the next 2 to 3 trading sessions. The second one is a sell in Sterlite. Stop loss of 117, target 109. A price and a volumes breakdown in daily charts. I see a 5-6-7% downside over the next day or 2. And the third one is a sell in Ranbaxy, which has given a price and a volumes breakdown in the hourly charts. I would sell it at the current levels or on a little bit of a upside of 1 or 2 rupees with a stop loss of 495 and a target of 478. And I expect this target should come in by end of the day.
Okay, so that's a buy on Tech Mahindra, shorting Sterlite as well as Ranbaxy. Moving on then to Prakash Gaba for his trading ideas. And Prakash, it's the large caps that you're focusing on today.
Absolutely. I like to short sell 1 and buy 2, starting with Cipla. That's a good shorting candidate. There's actually a broken down structure. I would say that it can slide down to levels closer to 404. I would just have a stop above 417 and trade the short side. Cipla seems like a sell. What I'd like to buy 2 is Reliance Industries. Looks like it's still up as long as 860 holds. As long as 860 holds, the next logical target in the days to come could be 880. Looks like a good breakout here in the short-term time frame. Third is the TCS, the mainline IT pack. IT is doing well today. It's been a beautiful breakout at 1350 zones. I would have a stop below 1350 and trade the long side. Can it go to 1380 plus? Yes, it can go to 1380 and 1400 zones. That's the zone I'm looking for a profit booking out here. So TCS is a buy, Reliance is a buy, and Cipla a sell.
Okay, so 2 buying and 1 shorting idea is what Prakash has got. But
exceedingly quiet for the equity markets. You've got Rajat Bose as well as Deepak Mahoney now joining in with their top trading recommendations. Rajat, to you first.
I have 2 buy recommendations and 1 sell recommendation. Buy recommendation on Polaris. Polaris looks pretty good. In fact, the way it is moving up, it can be bought for delivery as well, not just for trading. Polaris buy with a stop below 128 and target is 134, 137. In fact, if one holds on to it, it can even move up to 150 going forward. And second stock is AB Nuvo. Buy at any dip with a stop below 1140 on closing price basis. Targets are 1190 to about 1210. It's a 2-3 trading days time horizon that is thought about for this trade. And the lone sell call is Sesa-Goa. It's an intraday trade. Stop above 192 and a target of 182. Whatever be the level at the end of the day, you have to willy-nilly exit anyway, since it is a cash segment trade.
Okay, so Rajat's given you 2 ideas to go long on and 1 to short. And Deepak, you've also got a similar sort of trade for our viewers?
Yes, indeed. 2 buys and a short sale. The 2 buys are short-term trades and the short sell is a day trade. The first of the buys is United Phosphorus with a stop loss of 134, target of 141. This stock appears to be now ending a 1-week correction and resuming its move upward, which has been going on now for a couple of months. Good point to enter. Tata Motors, stop loss of 322 and a target of 340. The stock had corrected for a week and is resuming its climb today. So once again, similar to United Phosphorus, good point to get in. And the 1 intraday short sale, India Cements with a stop loss of 86.5, target of 84. This stock declined sharply yesterday. It was in fact rallying pretty well, but it reversed significantly yesterday and is continuing the decline today. So a good intraday short sale.
Okay, thanks very much, Deepak. So that wraps up all of the equity trading ideas. Let's finally move across and shift gears to the commodity space. Get in Vandana Bharti, Senior Research Analyst at S&C Comtrade, who now joins in to walk us through her commodity trading strategies. Gold is off its 1-week high and crude oil is near a 4-month high. So what are your strategies on both of these commodities, Vandana?
Actually, for today I am selling gold and for crude I am buy. And for gold I would like to say that for intraday I am selling this commodity, but for short term it is still looking good, and it is making a very strong base here, and it should touch the level of 31,200 to 31,300 in near term. But yes, for intraday I am expecting a fall in the prices because today there are many data scheduled, and we are expecting a positive outcome from all US data, whether it is housing start or initial jobless claim. So yes, safe haven buying should be around here, and we can see a downside level of around 30,725 in Indian market. In international market, we can expect further fall of around $4 to $5. So yes, I am selling gold, and for crude, yes, this commodity may see further high side, and last week I have given the target of $96, and it already reaching towards the level of $95. So again, I would like to stick with my previous target of $96. In MCX, I am expecting that this commodity may touch the level of 5190 because OPEC is cutting down the output, and we have seen a surprise decline in the inventory of US. So these two reasons are major reason behind the upside of crude oil.
Okay, buy crude, sell gold. That's a strategy coming in from Vandana. Thanks very much for joining in. But a disclaimer once again before we move ahead that if there are a lot of stocks and ideas discussed on the show, so if you act on any of them, please consult your financial advisor before doing so. Time to also thank the 6 technical guests who are with us today. Gentlemen, it was a pleasure having you. A quick